Hello, everyone. Welcome to today's session. Let's jump right in here. I think I might have had an issue with the registration link. Need to double check on that, but got a few people in here today, so let's go ahead and get started. Market conditions having a nice bounce here, and let's start off with just the overall market state. We are mildly bearish in a bull market, starting to work our way back to the upside, finding that support area at that 414 level on S&P 500. We've also talked about some of the divergence that's been starting to happen, or at least that had happened a few days ago. Now we're seeing the benefits of that as we've got more upside happening on the markets. We're seeing that sentiment also climb back up. So now what we've got a situation where we are in significantly higher. We're bouncing off of these lows. We're back up into this this downtrend range. There's some work to do, and we'll look at the charts here, but we're a pretty good job here of significant rally, and it's a huge amount of price activity. And we also have bonds buy-sell ratio, which is starting to curl back together again, which is what we want to see. As we have price activity that it gets too extreme, that just is not sustainable, starts to work its way back together again, has proven to be a good opportunity to buy back into the market right here. That 20.27, that's going to move significantly again today at the close once we end up getting that. We're also bouncing off of the low right here. So a pretty nice move on S&P. Well, all the markets really. We'll look at several different things here. We're seeing S&P. I'm going to come to this perspective and go to the 1-year chart. That 50% retracement area on that time frame. I actually need to go out just a little bit because it's pulling in. I want this low point right there, and we've got this swing high point, this swing low point, and we bounced off that. We had been talking about this 382, this 416 level, and it cleared it yesterday, and now we're almost already back to that 433 range. So a really strong rally right here, which when these markets start to move this aggressively, there's more than likely significant more upside from here. Now we're already to the point to where we could run into some resistance, create a little retracement area, and possibly this kind of a pattern. Now that we've moved, really 4 days, 5 days pretty aggressively. If we look at the 6-month time frame, we've got this low point coming back up into this upper range. So really 5 days just catapulting off of that low, which has been a good thing, because we've kind of been waiting for this, and also determining if this is just a counter trend of this overall uptrend. Retracing 50%, that's a common level, and starting to move higher now with some breadth behind that. We're also seeing sectors. We're seeing the vast majority of sectors which are also moving here. We've got uptrends now on almost all of them. They haven't moved. All of them haven't moved, and none of them have moved back to an uptrend buy zone area, but that's forthcoming. It's this bottoming process first, create some opportunity off of the lows, and then that ultimately ends up pulling more buyers. You get initial buying, and then you get fear of missing out buyers, and then you get short covering buyers that cover the remainder on that. So we've got pretty nice rally happening right here. Let's look at commodities real quick. We've got oil, which is gold, which is continuing to move and moving pretty nicely. It's up in that momentum range still. And then we also have oil. Oil's been pulling back a little bit. Let's see what it's doing here today. Up 2% on USO. Maybe finding some support, getting a rally on that. Now, the real issue here, or the real driver, I think, that's happening in the markets is TLT. We've seen a big pop on TLT today. It has some work to do. We've talked about this range when we're in this momentum zone to the downside here, and now running up into this upper $87 range on TLT. That's that's the beginning. Okay, we want to see this bottoming formation. Now we want to see it hold this, get up to that $88 range and then break it and close above it. If we could get a close back up above that 89 range and hold there, what that means is interest rates are dropping as bonds are moving higher. So we want to be able to continue to see that trend. And so a good thing here, we're seeing some real positives in really across the board in market internals. We look at sectors, we've got construction, which is leading. This is an interesting point on some of these stocks. We're seeing construction and home builders really take off. Beazer had a big move yesterday, some confirmation follow through on that today. That's interest rate driven. And the market is saying, or the market is anticipating that rates potentially have topped out here, or at least they're at an area where they could start to pull back a little bit. And that's ultimately what we want to, that's ultimately what home builders are wanting to see. And you're seeing that group really across the board there. Pulte had a massive move, and look how fast this happens. We can go through these. This took 2 months, 8 weeks, and we've erased that in 5 days back to the upside. So definitely counter trend, the uptrend, retracement, counter trend, and we'll see if we can continue this overall move. But that's a very positive, aggressive move on home builders, and those top three: Beazer, Pulte, KB Home, a nice move there. DR Horton also having a big move, all within that retracement zone. So what's interesting too is, a lot of these topped out. You notice August right here, when we started to see buy sell ratio starting to adjust back here, August 4th, 5th, 6th, and started to move higher. And really we got this spread right here. And if we look at the date on that, we can see that, even into that August 11th, August 10th, if we go back and look at some of these stock patterns around that time frame, here's August, this is the top, August 8, 10 right here. So you're starting to see a lot of those stocks just topping out, buy sell ratios expanding, and then we've had this correction, and really every stock, for the vast majority of stocks, have been counter trending and retracing, and now you're getting some seasonality as well. November traditionally is a good month, and so is December. So we'll see if we get some follow through on that as well. I want to go through, look at a couple of portfolios, and then also some additional ideas and some follow up on our conversation on Tuesday about the reversal pattern, because all of these stocks, when we go back in there, I wish I would have pulled these in a day or two ago, because they've all moved, but they all would have been inside of a reversal zone, and we'll look at that chart pattern. Current portfolios, the new buy daily portfolio is got some nice winners in there. It's about break even from where we started, but that's, a lot of this was grinding through that downtrend. And oftentimes this is something that you can avoid by starting to build out portfolios when buy sell ratio is improving, or you're getting even a buy sell ratio of 1. But in this case, this is a part of what we are building out here, is we're getting a handful of stocks that really have taken hold and really start to take off and continue to move there. And some of these you just can't ever know, like CIFR. This was a Bitcoin mining stock, up 14% today. That new buy signal here was back at this range at $3 and continuing to move higher as it moved from here. In fact, let's go through some of these open positions in this new buy daily portfolio. Some of them are, have this one, coal stock, oil stock, started back here. So now it's had this run up, and now it's pulled back. Potentially, you potentially could see some rotation out of some of these oil names, or in this case, coal names, and they could be retracing. Some of them are continuing to move higher. We're seeing as oil is starting to move. So NR also in the portfolio of the buy, I believe, is back here, and also continuing that overall uptrend. LPG, these shipping stocks are just going nuts the last 3 days, and so you're seeing massive volume coming back into the stock market. I think there was a lot of money on the sidelines that was just pent up and waiting for interest rates to budge of some kind, and That may or may not be the reason, who knows, but we're just seeing big moves on a lot of these names. TDW, this is another oil stock. At least it's back up in that buy zone. EDU, not a huge move on that today, but really nice pattern, still continuing that overall uptrend. Same with DAKT, moving in that uptrend. HCM, which is medical biotech, the new buy signal was back here and has just continued to gap higher. And some of these are nice surprises as they're continuing. WFRD, another oil stock. We've got 4 really good oil stocks, 5 really good oil stocks. All the fundamentals look really good. Oil moving higher, and it's continuing to move higher as well. TAL, this is starting to show some weakness. I've got a stop on that one at was my stop on that one, TAL at 830. So it's sitting right, it's getting pretty close. It's got to hold up above that 382, a stop level just below that 382. Chances are it's going to go back down to that 50, and I'm not interested in keeping it. In fact, you can also, when a stock starts to weaken, that rank is going to start to drop. It's, anything above 90 is still going to be good, but as we're rotating through stocks, eventually we're going to have a full portfolio, and we're going to have to adjust that by getting rid of weak stocks. So to be able to adjust that with the portfolio and saying, okay, out of this group, which ones are the weakest ones? If we want to add something in new, and we've still got quite a bit of cash in that, but if we're going to add something in new, where would we start? We would sell the weakest ones, sell that one, and then start to add in. And if everything is winning, everything is positive, we're still going to adjust with something new and sell out of the weakest and continue to hold on to the ones that are working the most. That strategy is letting the winners run as long as they're working. Okay, let me go this other direction, because as those winners continue to work, those are showing us that those are the ones that are working. And here you've got HNRG, which is showing a little bit of weakness within that overall uptrend, but nothing nothing too concerning quite yet. It's at $10. So if we go $10, that's a little bit deep. I'm going to actually adjust that stop. I'm going to do that on this one right now, because I don't want to give back much of those gains above the momentum zone. So 1322, even if we were to go at the low of right here, right around 1325, and we can adjust that stop loss on 1325 on where did it go? H right here, 1325. So we're just going to update that 1325. Now inside obviously this is just our portfolio inside of the account. We would need to go into our brokerage account and adjust the stop loss on that as well. Very simple process to be able to do that. And that's kind of what we're working with right here. So the sell to buy portfolio, similar idea. We don't have as many holdings in there, but they're different. Except for OLMA, we've got a handful that are different. MSTR, which is this buy point here, big nice breakout. There's some nice stocks that are building out in that portfolio as well. One of the other things I did want to go over though is, as we're building out portfolios and utilizing some of the screens to do that, these two methods that I'm using as of now are just flat out new buys. The top stock or 2 in the new buy list. And one of the other ways, we've talked about building out your own, but there are some pre-built scans here that you can use as well, that if you want to be able to add into some of those type of stocks into portfolios, there's some ideas to be able to do that from these scans as well. The vast majority of these are also going to be sorted by these criteria, but then also on a new buy signal. Some of them don't, like the book value to last. I don't think that is on a new buy signal. It might be. I'll have to double check on that. But like sales growth over 50, let's look at that. Yeah, so that one is just flat out sales growth over 50, and it doesn't have a new buy. So you can create that in the screener as well to be able to do that. But one of the ones that was interesting was this. It wasn't that one. It was 5% dividends. So these are new buy signals, and they have they have high dividends. So this maybe not is the greatest example, although that's not too bad, just extremely volatile in a retracement, but it does have a nice dividend, okay, up 7%. So as you're looking for different criteria to be able to implement into your new buy, you ideally you want to add it on a new buy, but you can have other criteria to that. So you may have like LPG. We already have that one, I think, is our that's our big mover here. But that also has a nice dividend. Where did that dividend payout go? That's a 13% dividend, all while the stock is continuing to move higher. So in a scenario like this, ideally we are able to buy into that uptrend. The momentum is continually moving higher, and we're getting paid a dividend on that as long as it continues to move higher. Okay, now in this case, you may have situations where it runs up and retraces. The dividend in this case is kind of icing on the cake. The vast majority of the gains we want out of capital appreciation, the share price moving higher. But if it continues to work higher and continues to move higher, and it's maybe we end up owning it for, who knows, 3, 4, 5, 6, 8 months, 12 months, something, and it continues to work, then we're getting paid dividends on top of that as well. It's a great way to get to maximize the overall performance inside of the portfolio, is to have dividend paying stocks as well as non-dividend paying stocks. Or you could simply you could add the dividend paying stocks into that portfolio only if you wanted to. We've talked about some of those ways to be able to create some of those scans, but the pre-built 21 scans that you've got here, they've got a lot of different settings that you can look at. One of the interesting ones here, PE less than your annual growth. So in a lot of cases, you'll get the annual growth. The annual growth is higher than the PE. The price to earnings can oftentimes catch up to that. And you've got some really good looking companies here, some good looking names. COCO is one. It's getting a big move today. Good solid uptrend, deep retracement during this last move, but now back up in that momentum zone on the 1 year time frame. And DAKT, we also have that one in the new buy portfolio. That one's moving higher in that overall uptrend, and just some good fundamentals overall. Some good looking companies, and we're getting price appreciation on top of that as well. So that scan is found here on your trend following setting. It's not on the reversal setting. It's just on this one here, and you can go through and look to see on some of those. It's nice sometimes to be able to have just a quick scan, a quick glance to be able to look for some. That one's empty. Some of those could be. Let's see if we've got any volume spikes. Some of those are not. Nothing in those. 50. So sales growth. This is again pulling in sales growth on some of these companies. That's just some bad data on that one. So not pulling in some great ideas there, but that is the sales growth setting on, or that is the 21 scan setting on your screener. Okay. Let me just jump back over to, reversal and look to see what we've got on some of those. Top of the list right here, interesting. This is AI, this stock AI, which, oops, didn't mean to do that. Wanted to go here. So you've got in this last trend, you've got the swing low, the swing high, and you've got a ton of support right here at this 618 range. Okay, and so now it actually has bumped this deep retracement. Remember, what this is looking for stocks that have done this, and they're starting to turn that corner. Okay, they've got an uptrend, counter trend, ABC pattern, and now starting to bounce. 13% on this one. This one may actually really get a run on it because it's talked about so much in that AI space, and could be an early entry into a continuation of that uptrend. $20, it's been at 40. It went up several 100% in this last trend and retraced most of the summer, and that's a pretty nice igniting bar right there on that stock. I'm gonna just go here and go to the new ABC list. So AI is top of that list. ODC, basic material. Hey, remember that we can build out, these are the predefined scans, and a lot of times they're good enough because here you're getting a retracement, the ABC pattern. Remember what the point of this is. The point of this is when a stock is trending this direction and pauses or counter trends, moves back the other direction, there's going to be locations that create high probability reversal zones. And you never know which one is going to hold. So you want to see continued price activity holding. In this case, it's that 382 holding up really, really well. And now you're getting some confirmation. It even traded lower today, and now it may close back up above that. So interesting stock on that. And that's just the second stock in the list. Okay, LWAY, Lifeway Foods. Not ideal. I'd want a little bit deeper retracement. This one's too deep of a retracement. Okay, so some of them are not going to be great setups. Some of them, this is a little too sloppy for my liking. I want to see a smooth pattern. That's a buyout. So you may have to go through some of these and look for a little bit cleaner pattern. That's not bad. It's one day though. If it were to close back up above that momentum zone, that could provide an opportunity there. Really nothing great looking today. A lot of them have already moved. Here's one that has had another big move, WEAV. Okay, so that's just the counter trend reversal app strategy to be able to look for some stocks. Let's see if there's anything in this list. CAMT. A lot of these are just really bad downtrends. This is the risk of a counter trend move. The risk is that it's already in a downtrend, and there's a chance that it could continue to be in that downtrend. There's some weakness. So ideally you want to wait for a little bit of confirmation back up, a day or two of it actually closing. I mentioned that in the last update is a close. Let's see if we can find a good example here. In fact, the scan that I like is this one, this buy to hold reversal. I'll show you the settings on it and see if we get any confirmation on these. SMCI, this stock has been, it was a high flyer during the spring and summer, and can't quite seem to get its act together here, but some support in that range, not too bad, but that is breaking down today. Come back into the 6-month time frame. Now that we're dealing with, some of these stocks are getting pops. Wow, they're just, this is crazy. This is a fascinating move we're seeing on the market as a whole right now, just really moving higher. I'm going to skip back out of that. Really nothing super interesting in there today. The vast majority are now we really want to start to look for momentum style trades. We're going to get a few like Beezer that are bouncing off of these lows and may continue that overall uptrend. And they actually on that 1-year time frame look really constructive, bouncing off of 50%, and nice smooth patterns as well. Let's go through a couple of these. So again, part of dealing with, there's so many stocks, is which ones do you want to be able to focus on? And you can either focus on the top 1 or 2. You can focus on a specific scan, muscle minis. These are going to be lower price stocks, $3, $4, $5 stocks. Let's look in some of those and see if we've got anything interesting. Some utilities. Utilities have been starting back up again. INIC turning that corner, starting to move back up. And let me go to this scan here. The new buys. And we'll go to the 6-month, and let me switch back here to signals so we can look through some of these. This is the strong suit of this methodology, is with these kind of stocks right here in this kind of a market condition. Ideally, the market conditions are a little bit stronger, but we're just in that early phase, and we're looking for stocks that are starting to move higher, or they're already in that upper momentum range. You got some that are the reason these stocks are in this range is because they have a high rank. And the reason they have a high rank is because in the last 12 months they've had big moves. Okay, so even though they've gotten pummeled, the rank is a 12-month rank, and so it's still going to take this trend into account and give it a high enough rank. And sometimes that's good because it pulls in momentum traders that are looking for stocks that can move and be pretty volatile. Here's some more home builders. This one I would not be real interested in. I don't know why. Yeah, this one went from, all within the last year, went from $5 to $35, back to $5 again. There's some volatility for you. It's a lot like Moderna. Moderna has really gotten beat up. Here's an oil stock. Again, this is in the new buy daily portfolio. Added into that, and now it's continuing that overall momentum. The whole point is we want stocks that are strong, because they typically will continue to be strong. This one is, there's had some volatility here. If it can break out and then just keep on moving that overall uptrend, when they reverse, we stop out of it, we get out of it, we look for something else that is in that new pattern and add that into the portfolio. This way, we're not having to overanalyze a whole lot on what we're doing, what we're buying, and why, because that creates just too much analysis paralysis of should I buy Tesla, should I buy Apple, should I buy Microsoft? Those are the big names, right? You can certainly do that, and that's one of the strategies to be able to add into a portfolio. Is you can go into the indexes and you can say, okay, there's 8 Dow stocks right now that are in uptrends. Microsoft, are any of them above 90? Ideally, you want to be in stocks that are above 90 rank. Intel and Microsoft. Hey, Intel in the last 6 months back up in the momentum zone. 12 months still off that trend. Not bad for Intel. And also, let's look at Microsoft. Microsoft has been strong in this last year, and this is a good momentum trade as well. So of the 2 Dow stocks in uptrends above 90, those look good. If you go back into indexes and say, well, what about the NASDAQ 100? Let's look at those 14 stocks. You've got Microsoft, you've got Netflix, you've got NTES, the 1-year time frame, momentum zone, breakout trade. Those are the best candidates right there. Those are the best ones. They're in the upper range. You had a retracement. It's continuing to move higher. You've got a solid line in the sand where where you're going to be wrong if that thing continues to retrace and ultimately breaks down below that low. And Netflix, let's look at Netflix. It's had a pretty decent run here. Is it back up there? Had big earnings, retraced off the 618. It's headed in the right direction. We'll see if we get any follow through on that. Amazon, Intel, Ross Stores. Amazon's actually up here in the above 90 as well. That 1-year time frame. Amazon's getting some strength right here. So interesting time right here in the market for continuing to build out a portfolio in high quality names, 90 or higher ranks that are trending higher, that are in that upper momentum zone, and a buy sell ratio that is starting to come back together again, starting to work its way back closer and closer. This is this has been a pretty long downtrend that we've had. They're typically not this long, so we could see a significant move here. And if we do get back up and get some momentum, this would be another location to be a little bit more aggressively bullish, larger positions, more positions. Once that starts to happen, as of the last 6-8 months, it's been relatively light. We haven't made a lot of trades depending on the portfolio or the strategy, because we've just been correcting and counter trending, and that in those market environments just typically is asking to be stopped out of trades. So be watching for that. Again, it's the S&P. This is a really significant move. Just the intensity of this move now. A little bit hard to see with that yellow on there, but you can see we've rallied really hard off this low and getting some constructive bullishness here, wiping out a month of downturn in 3 days. So I like it. I'm going to end on that note. I appreciate everyone's time and effort today, and we will see you next time. Thanks a lot. Bye now.